We know that Suga is set to win the race, and Suga is seen as a safe pair of hands, continuity of Abenomics. The question really is, Abenomics has been mixed at best. Do you see Suga having to build on it, tweak on it?
Thanks very much for having me back on the show. Great to see you again. Two parts of that question. First of all, is Suga going to be the guy? I think we all know that's sort of a foregone conclusion. He'll be the next prime minister. What does that mean as far as policy-wise? In the very, very short term, very little change. But potentially in the medium term, and depending on whether there's a snap election or not, I think when history looks back at the Abe administration and the three arrows, I think history is going to say he laid the essential groundwork that will allow Japan to make a great leap forward at some point. He promised that great leap forward, i.e. the third arrow of structural change. He didn't deliver fully, certainly. That's no one's going to contest that. That's possibly why he's leaving a little bit early. But the groundwork is laid for that great leap forward, and that is what he will, I think, essentially get credit for. Is Suga the guy to deliver on that? We'll soon see.
Well, Abe is also known for the debt pile. Even before the pandemic, the debt pile was more than 200% of GDP. That means that spending could be curtailed, and that also essentially means that growth could be dampened.
Well, you know, debt in Japan is always a fascinating topic. Most of the debt's owed internally. Again, Japanese are large holders of their own debt. So that means that they're not as responsive, if you will, to external forces affecting debt. What does that mean? It means the BOJ and Kuroda and the sort of focus on how they'll run interest rates, I think, will remain very much unchanged in the short term and even in the medium term, frankly. I think it was noted in the earlier discussion of the legacy of Abenomics. Did he get to his 2% inflation target? No, he didn't. But there are a lot of global factors impacting on why he didn't achieve 2%. Again, even getting to half that, the 1.1% inflation number was an enormous leap forward for Japan after decades of deflation. So I think those are all points you need to consider when answering that question.
Ed, is a continuation of Abenomics necessarily a sound strategy? I mean, yes, it may bring stability to markets, but Shinzo Abe, his approval rating was at or near record lows right before he stepped down. What does it actually mean for investors, do you think?
I think what this means for investors, and I'm just going to refer back to my earlier remarks, has the foundation been set for Japan to return to a period where it's seen as a growth story? Frankly, because it hasn't been that in 3 decades. I'm just going to say we need to understand why Warren Buffett just put $6 billion to work in this economy, the greatest value investor of all time. What sort of bets is he making about where this economy is headed? And I think the answers are very positive ones. We see this as a pivotal moment in time. Again, Abe, I think, was his negative ratings were more on a personal level than a policy level, to be honest. And it'll be up to the next prime minister or one or two prime ministers, depending on how long before we have the next election, to decide what they do with that legacy. I believe the foundation is laid again for Japan to actually return to being a growth story in many respects and a value story, and that investors will benefit from that.
And you mentioned Warren Buffett buying stakes in those 5 Japanese trading companies. That could potentially spur more investments into Japan, similar to what we saw. How do you take advantage of that? I mean, what are some areas that we should be focusing on?
Look, anecdotally, I can tell you, we've been running a Japan fund that only twice in the last 15 years had negative years. It's outstanding, rock star performance. Nobody has cared about Japan. The single biggest change impacting Japan over the last 15 years has been the rise of China. And for a lot of reasons, the China story has now, the bloom is off the rose for a variety of reasons, which we could have a much longer discussion about. But the fact of the matter is, the Japan story changed the moment Warren Buffett's investment became public. Before that, many international global investors simply weren't taking Japan seriously as an opportunity. And with a $5 trillion economy to play with, in a land of laws, a rule of laws, in the most medically safe G20 country in the world right now, in a country where the political transition is going to be remarkable for its unremarkableness compared with the political transition we're looking at in the United States. This country is safe, sound, and easy to invest in, and Warren Buffett making a multi-billion-dollar investment is a enormous green light, if you will, for international investors to think about Japan again.
But those trading companies that Berkshire Hathaway bought into are susceptible to volatile energy and resources sector. I mean, what do you make of the risks there?
So my view is, first of all, why did he invest in 5 of them, the top 5? He spread bet. The guy who is famous for picking Coke over Pepsi and saying, I'm going to pick the winner. I think he was looking for broad exposure. They're not all going to be winners, by the way, but he'll increase his stakes in the ones that look like more, they're going to distance the pack, if you will. I think in general he wanted a broad entry point, if you will, that these companies do provide, frankly. And you have to understand the modern trading company in Japan is somewhat maybe more akin to a securities firm or a private equity firm. They're very, very interesting economic vehicles, structures, if you will, as far as how they allocate capital. They're much more comfortable with risk, let's say, than the average Nikkei 225 type company would be, than the manufacturing sector might be. They are able to deploy resources globally as needed. They have enormous, again, their balance sheets are very, very strong right now. I think they weighted average out to something like 75%, cash to, book value. They're very, very strong, safe, steady, the types of investments on a value side that Warren Buffett, I think, is quite famous for checking all the boxes before he would ever put a penny to work, much less $6 billion.
And Ed, I'd like to go back to your point about this potential great leap forward for Japan. It's interesting. There's a lot of questions, too, about whether the country can be a base for global finance. Is it a viable alternative to the likes of Hong Kong? Do you think the LDP can capitalize on a potential fallout here in the city? What's preventing Japan from becoming an international hub?
My first answer is I certainly hope they can capitalize on this, because that would be a very good thing, not just for Japan, but for, honestly, the global asset management industry and the asset management industry in Japan in particular. Where a looming pension fund crisis will hit here first, and then the rest of the world is about to follow. And you need to manage money better in order to solve that problem. Will they capitalize on this moment is a very interesting question, because it involves a number of big picture issues for Japan. How do you treat taxes? How do you really regulate businesses? How do you create the environment that culturally is an acceptable environment in Japan to run a business or even launch a new business? I think the jury's out. Let's wait and see what Suga-san's cabinet looks like. Let's see who get a couple of different key positions. And then we'll start to be able to read some tea leaves, if you will, about the level of commitment to that particular part of the Abenomics story and the Tokyo Metropolitan Government story.